Hey everyone, and welcome to a deep dive you won't want to miss. We're going to be tackling a pretty big topic today, folks: global finance. More specifically, the Financial Stability Board's 2024 report. Think of it like a yearly checkup, but for the entire world's money system. And let me tell you, there's some interesting findings in here, to say the least.
Yeah, it's a pretty dense report, but super important. There's a lot to unpack for sure.
Okay, so maybe we should start with the basics. For those who aren't familiar, what exactly is this Financial Stability Board? What's their role in all of this global finance stuff?
So the FSB is kind of like a global watchdog for the financial system, you could say. It's this international group that works on coordinating the rules for banks and all those financial institutions around the world. Now, they don't actually set the rules themselves, but they work with different countries to make sure everyone's kind of playing by the same rule book, you know?
So, like, they're the referees making sure no one's cheating.
Exactly. And in this latest report, they're basically waving a few yellow flags, pointing out some major issues that have been around for a while, problems that just haven't gone away.
Okay, so let's get into it. What are some of the big things that have the FSB worried?
Well, one of the things they're most concerned about is that asset prices are still really high. Everything from stocks and bonds to even real estate is expensive right now. It's like walking into a store where everything's marked up like 50%.
So, what's wrong with that? I mean, if things are worth more, isn't that a good thing?
It can be, sure, but it also means there's a much bigger risk of a sudden drop. You know, if some unexpected event happens, like interest rates spiking or the economy slowing down, those prices could come crashing down really fast. Think of it like a balloon that's been blown up way too much. One little prick, and the whole thing deflates.
So, are they saying we're in a bubble that's about to burst?
Not necessarily, but they're definitely warning about the potential for what they call sharp correction. In fact, they even point to this episode back in August 2024, just a few months ago, where we saw a little glimpse of what could happen. Some economic news came out, spooked investors, especially in places like Japan and the US. And suddenly everyone was selling, markets dropped. Just a reminder of how quickly things can change, you know?
Yeah, that's a bit unnerving. What else is keeping the FSB up at night?
Another big issue is all the debt. The amount of debt that's been piling up around the world is pretty massive. Governments have borrowed heavily, especially during the pandemic, and so have companies and individuals. When interest rates were low, it wasn't too hard to manage all that debt. But as rates go up, things get a lot tighter.
Yeah, it's like having a mortgage with a variable interest rate. Suddenly your payments are way higher.
Exactly. And when we're talking about like trillions of dollars in debt, those higher payments can cause a ripple effect through the whole financial system. Countries might have trouble paying their bills, companies could face bankruptcy, and people might have to cut back on spending.
So are they saying we're on the verge of a debt crisis?
I wouldn't say crisis necessarily, but they are definitely concerned about the sheer amount of debt out there and what could happen. And it's not just about developed economies either. The report also points out that emerging markets, those countries that are still developing, are even more vulnerable. They've made progress, sure, but they could be hit really hard if investors lose confidence and pull their money out.
Okay, so we've got these long-standing problems like high asset prices and all this debt. But what about new threats? What's coming up on the horizon that has the FSB worried?
Well, one of the things they're really focused on is this rapid growth of, it's called non-bank financial intermediation, or NBFI for short.
NBFI, that sounds pretty technical. What is that exactly?
So basically, it's all the financial activities that happen outside of traditional banks. Think hedge funds, private equity firms, private lenders, that kind of thing. It's a whole web of institutions that are playing a bigger and bigger role in the global economy.
So it's kind of like a shadow banking system running alongside the regular banks we all know.
Yeah, you could say that. And the problem is, this shadow banking system is often very opaque. We don't really have a clear picture of what's happening inside, which makes it hard to figure out the risks.
So there could be all these hidden dangers lurking in the NBFI world.
That's the concern. One specific area they highlight is private credit, which has grown a lot lately. Private credit is when companies borrow money directly from private lenders instead of going to a bank. It can be a useful source of funding, but we just don't have enough data on what's happening in this market. It makes it harder to manage those risks.
Okay, so NBFI is one new threat. What else is on their radar?
Well, cyber attacks and tech failures are becoming a much bigger worry. You know, as the financial system relies more and more on technology, it becomes more vulnerable to disruptions too.
That makes sense. Everything's so interconnected these days. A problem in one part of the system can quickly spread to others.
Exactly. And the report actually mentions a couple of pretty scary examples. Back in July 2024, there was this major outage at SWIFT, which is the global messaging system banks use to communicate with each other. Mostly impacted Europe, but it caused a lot of disruption to international payments.
Wow, I can imagine. It's like the internet going down for banks.
Right, and then, get this, the very next day there was another big outage, this time caused by a software update from a cybersecurity company called CrowdStrike. This one had an even wider impact. It affected banks, brokers, tech companies, even government agencies all over the world.
Wait, so one bad software update brought a whole chunk of the global financial system to a halt?
Pretty much.
Yeah.
It just goes to show how interconnected and fragile the system really is.
Yeah.
One weak link can have these huge cascading effects.
Okay, so cyber attacks and tech failures, definitely something to worry about. But what about climate change? How does that tie into the financial system?
Climate change isn't just an environmental problem anymore, it's a financial risk too. The FSB report actually identifies two main ways it can impact the system.
Okay, let's break those down.
So first, you've got what they call physical risks. These are the direct impacts of climate change, things like extreme weather events, floods, hurricanes, droughts. Those events can really disrupt economies, cause huge losses, and make it harder for businesses to operate.
Yeah, I mean, those kinds of disasters are incredibly costly.
For sure. And then you have what they call transition risks. Those are the risks that come with shifting to a low-carbon economy. As governments put in place policies to fight climate change, some companies and industries might struggle to adapt.
So, for example, like companies that rely heavily on fossil fuels could see their value plummet if the world suddenly switches to renewable energy.
Exactly. That's a perfect example of a transition risk. And the FSB is particularly worried about what happens if these transitions happen too abruptly. It could cause a lot of instability in the financial system.
Okay, so we've got a lot to worry about here. Inflated asset prices, mountains of debt, this rise of shadow banking, cyber attacks, tech failures, climate change. It's all starting to sound pretty bleak.
It's definitely a challenging landscape, that's for sure. But the good news is the FSB isn't just sitting around doing nothing. They're actively working to address these threats and make the global financial system stronger.
Okay, that's reassuring. So what are they doing? What's the plan of attack?
Well, one of the things they did was take a deep dive into that banking turmoil back in March 2023. Remember when those banks collapsed and everyone was worried about a bigger crisis?
Oh yeah, that was a pretty tense time. I think we were all a little nervous about our savings back then.
Right. So the FSB has been studying that whole episode really closely, trying to figure out what went wrong and what lessons can be learned.
So what did they find? What caused that whole mess?
Well, it was complicated, but one of the big takeaways was how fast things can unravel in this digital world. With social media and online banking and all that, fear and panic can spread super quickly. The FSB is worried about how fast people can pull their money out of a bank if they lose confidence. They call it a digital bank run.
So you're saying like a viral tweet or a trending hashtag could actually trigger a bank collapse?
I mean, it's not totally impossible. The FSB is definitely concerned about how quickly things can change in the digital age. It makes the system more volatile, harder to predict.
That's a little scary. So what are they doing to address that?
Well, they're working on ways to make banks more resilient so they can handle those rapid outflows better, encouraging banks to have more capital, basically more money on hand to cover losses, and looking at ways to improve communication and transparency so people have more confidence in the system.
Right, more transparency, less panic. Makes sense. So what about all that shadow banking we were talking about, that NBFI stuff? Are they doing anything about those risks?
Oh, yeah. They're working on developing rules and regulations for some of those less regulated areas. For example, they're looking at open-ended funds.
What are those?
So those are investment funds that let investors redeem their shares at any time.
Why are they a concern?
The problem is, if a lot of investors try to cash out at the same time, it can create a liquidity crunch. Like everyone trying to exit a crowded theater at once. Leads to a stampede, forces the fund to sell assets quickly, drives prices down, creates more panic.
So they're trying to prevent those financial traffic jams.
Exactly. Working on rules to require these funds to hold more liquid assets, stuff that can easily be turned into cash. And looking at ways to manage those redemptions better so everyone's not rushing for the exit at the same time.
Okay, that sounds like a smart move. What about climate change? What's the FSB doing to tackle those risks?
Well, they've actually put together a roadmap with 4 key pillars to address climate-related financial risks.
Okay, break it down for me. What are those 4 pillars?
The first is disclosures. They want companies to be more transparent about their exposure to climate risks, both physical and those transition risks we talked about, so investors can see how climate change might impact a company's bottom line.
So basically, Show us the receipts, prove you're taking it seriously.
Right. The second pillar is data. They're pushing for better data on climate-related risks so we can actually measure how big the problem is. You can't manage a risk if you don't know how big it is.
Makes sense.
The third pillar is vulnerability analysis. They're encouraging financial institutions to do their own assessments, figure out how vulnerable they are to climate risks. Like banks and lenders, they need to think about how climate change might affect their borrowers, their investments.
So don't just look at your own books, look at the bigger picture.
Right. And the fourth pillar is regulations. They're working on ways to integrate climate risks into existing financial regulations, make sure the rules of the game are taking climate change into account.
Okay, so more transparency, better data, vulnerability assessments, and updated regulations. It's a multi-pronged approach. Sounds like they're really trying to get ahead of this.
They are. And it's not just climate change, they're working on other challenges from new technologies too. For example, they're developing guidelines for cyber incident reporting.
Why is that important?
Well, if there's a major cyber attack, it's super important that everyone knows what happened and how to respond. The FSB wants to make sure there's clear communication and coordination among everyone in the system.
So no one's running around like chickens with their heads cut off.
Exactly. They want a more unified response to cyber threats. They're also looking into something called tokenization, which is kind of complicated.
Okay, wait on me.
Basically, it's a way to represent real-world assets like stocks or bonds using blockchain technology.
And what's the point of that?
Well, it could make financial transactions more efficient and secure. Imagine having a digital deed for your house or your car stored on a blockchain. Makes it easier to buy and sell, reduces fraud, streamlines the whole process.
So they're looking ahead to a future where blockchain plays a bigger role in finance.
Yeah, it's early days, but they're definitely keeping an eye on it.
Okay, so they're tackling a lot. Strengthening banks, managing those shadow banking risks, climate change, cybersecurity, even blockchain. That's a pretty full plate.
It is. And we haven't even talked about Basel III yet.
Ah, yes, Basel III. For all the banking nerds out there, let's dive into that. Remind us what Basel III is all about.
Right, Basel III, the big one. Basically, it's a set of international rules they came up with to make banks safer after that whole 2008 financial crisis, you know.
Yeah, like a global rule book for banks.
Exactly. It sets standards for how much capital banks need to have, how they manage risk, how they handle losses, all that stuff, trying to prevent another major meltdown.
Makes sense. So what's the latest on Basel III? Are banks actually following these rules?
Well, there's good news and bad news. The good news is those reforms they've already implemented seem to be working. Those banks that went through the stress test back in March, they were more resilient because of Basel III.
So the rules are doing their job.
It seems like it. But the bad news is implementation has been kind of uneven. Some countries are dragging their feet, haven't fully adopted all the rules yet.
So you've got some banks playing by the new rules and others still using the old playbook.
Yeah, and that's a problem. Creates an uneven playing field, makes it harder to manage risk globally.
Right, like trying to play a game where everyone's using different rule books.
Exactly. So the FSB is really pushing for full, consistent implementation everywhere. They say it's crucial for global stability.
But I imagine that's easier said than done.
It definitely is. There's a lot of political and economic stuff to work through, but the FSB is working with countries to try to overcome those obstacles and get everyone on the same page.
Okay, so we've covered a lot of ground here. All the major risks: asset prices, debt, shadow banking, cyber attacks, even climate change. And what the FSB is doing about it. Strengthening banks, managing those new risks, exploring new technologies, pushing for global cooperation.
It's a lot to keep track of, that's for sure. The financial landscape is constantly changing.
It is, but it sounds like the FSB is at least trying to stay ahead of the curve, trying to keep things from spiraling out of control.
Absolutely. They're playing a crucial role in maintaining stability, trying to prevent another big crisis.
It's reassuring to know someone's paying attention.
Yeah.
Because I have to admit, all this talk about global finance can be a little overwhelming sometimes.
I get it.
It's like, what does it all mean for me, the average person, just trying to manage their own money?
That's a great question. And, you know, while the FSB report is focused on the big picture, there are definitely some lessons we can all take away from it.
Like what? How can we apply these global insights to our own personal finances?
Well, one of the biggest takeaways is diversification. Just like the FSB wants to see more diversity in the financial system, we should be diversifying our own investments too.
Don't put all your eggs in one basket, right?
Yeah.
My grandma used to say that all the time.
Exactly. Spreading your money across different types of assets, stocks, bonds, real estate, can help you weather those market storms and reduce your overall risk.
So diversify, diversify, diversify. What else?
The report also really highlights the importance of debt. We were talking about how too much debt can be a big problem for countries. Well, it's the same for individuals too, especially as interest rates go up.
Oh, yeah, tell me about it.
Right.
Those rising rates can really hurt, especially if you've got a lot of credit card debt or a variable rate mortgage.
Exactly. So it's crucial to be mindful of how much debt you're taking on, make sure you have a plan to manage it responsibly.
Pay down those high interest debts first, right?
Absolutely. And if you're thinking about taking on new debt, shop around, get the best rates and terms you can find.
Okay, diversify investments, manage debt. Any other words of wisdom from the global financial gurus?
Well, they also really stress the importance of staying informed. Just like the FSB is constantly watching the global landscape, we should be paying attention to the economic and financial news that could affect our lives.
So don't just bury our heads in the sand and hope for the best.
Right. Staying informed helps us make better decisions and be more prepared for whatever comes our way.
And speaking of things that might come our way, what about climate change? It sounds like that could have some pretty big financial consequences down the line.
It definitely could, and it's something we should all be thinking about. How might climate change affect our investments, our jobs, our communities?
Yeah, it's a little daunting to think about. Where do we even start?
Well, a good starting point is to think about how climate change is already impacting the companies you invest in. Are they doing anything to reduce their carbon footprint? Are they adapting to a low carbon future?
So we should be doing our own research, not just blindly trusting that companies are doing the right thing.
Exactly. We have a responsibility as investors to make informed decisions. And those decisions can make a difference. If enough investors start demanding action on climate change, companies will have to listen.
That's a good point. It shows that we're not powerless, even when faced with these huge global problems.
Definitely not. And remember, the FSB is already taking climate risks seriously. They're factoring them into their assessments and recommendations.
So they're leading by example. Okay, so we've got diversification, debt management, staying informed, considering climate risks. Anything else we should keep in mind?
One more thing. The FSB report really emphasizes the importance of trust and transparency. They're trying to build a global financial system that's more open and accountable.
So we should be looking for those same qualities in our own financial dealings.
Absolutely. Do you trust the institutions you're working with? Do you understand how your money's being managed? Are you getting clear information?
Transparency is key, especially in the world of finance, where things can get pretty complicated.
For sure.
Well, I think that's a great place to wrap things up. The global financial system is a wild ride, that's for sure. But by understanding the risks, staying informed, and taking action, both individually and collectively, I think we can create a more resilient and equitable future for everyone.
Well said.
And that concludes our deep dive into the Financial Stability Board's 2024 annual report. A huge thank you to our expert for walking us through this complex landscape.
It was my pleasure.
And all you listeners out there, we encourage you to check out the full report if you want to dive even deeper. We'll have a link in the show notes.
Until next time, stay informed and stay engaged.
Happy diving, everyone.